Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 6:20 in New York on Thursday, 15th day of August 2024, and this is the evening report for gold and silver. Gold futures had modest gains in New York today, gaining $8.50 or 0.34%. December futures are trading overseas now, down $2.20 from the close, and fixed at $2,492.30. The gains in gold today came after a early morning strong price decline. We are looking at a 30-minute standard candlestick chart, and you can see that as gold opened in New York, it opened at around $2,506, traded to a closing price of $24.7850, and then would spend the rest of the trading session recovering and stabilizing at current pricing. Today, dollar strength hindered the upside move in gold, with the dollar gaining 0.44%, taking the index to 103.036. Silver had an exceptionally strong upside move today, gaining almost 3%, 2.91%, taking the most active September contract to $28.83.5. We sent out a trade alert to place a order to buy December gold on a limit at $24.7950, initially placing our stop at $24.75. After gold began to move higher, we did raise our stop up to $2,482, and it continued to rise until this morning, when abruptly the market sold off in New York, resulting in us getting stopped out with a modest $250 profit. While we did make a profit on this trade, obviously the market had moved substantially higher and sold off in a very short period of time, which is why we were reluctant to move our stop tighter too quickly, expecting there to be a volatile range, but the volatility of this half hour of trading was more than we expected. Nonetheless, we were able to book a profit rather than a loss on this trade. The takeaway is it is tricky to trade when a market is near all-time record highs during a time of extreme volatility. Nonetheless, we remain extremely bullish as to where gold will go from here over the next month. In terms of our Elliott wave count, first, our primary Elliott wave completed our correction as a descending top and flat bottom, restarting the cycle and going through wave 1 on our primary count, wave 2, and have now entered our third wave, which began on Thursday, the 25th day of July. All of the activity is part of a primary third wave, and we are going to look at the subcount just as we did here on wave 1, looking at this as 1, 3, 4, and 5 wave, 2, A, B, C, and now our primary third. We have most likely completed our subcount wave 1 and our wave 2, which means that currently we are in a third wave scenario, which means that we can begin to plot our primary third wave by using our benchmark wave 1. We simply have measured the distance of the total move in wave 1 from approximately $2,350 up to the highs just above $2,500, and beginning at $2,400, the conclusion of this second wave plotted a Fibonacci extension. At minimum, we would expect gold to move to at least $2,580. That is simply saying that this wave 1 and the upcoming wave 3 will be equal. A move above that, such as a 1.236 extension, would take gold much higher, above $2,600 per ounce. One of the primary technical reasons we are so bullish about gold currently. That, as well as the fundamentals that are driving gold to higher pricing, is why our strategy is to position ourselves again from the long side at the best available price that we can get. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.